Incorporated. I'm Chimezie Uwa. On the show today, all eyes on South Africa as ANC seeks to reverse sliding support from voters. Zimbabwe Central Bank sees official and black market exchange rates converging in 3 months. Plus, Egypt moves to cancel planned increase in stock exchange duty. Let's get the show started now with the markets. And market sentiments were negative across major markets here in Africa at intraday. Now, the EGX 30 in Egypt was hit the most, shedding 2.02%, while the NSE was down 0.01%, just marginally there. The JSE index in South Africa ended Tuesday's session negative, but it's closed for the country's elections for today. Kenya also closed negative on Tuesday. Meanwhile, markets in the Gulf region were also negative at intraday, with Qatar taking the hardest hit, down 1.25%. Saudi Arabia was also down 0.81%. Over in Dubai, the index was down 0.48%, while Abu Dhabi was down 0.01% at intraday. And in Europe, stocks traded mixed in the morning as the escalating threat of a trade war between the U.S. and China continues to weigh on major markets. Meanwhile, Chinese trade data for April showed both exports and trade surplus missed expectations. Well, let's bring in Conrad now to bring us up to speed with sentiment in the European markets pace at the moment. Hello, Conrad. A beautiful day to you again today. Thank you for joining us.
Hello, Timmy. Thank God it's Wednesday.
Oh, yeah, it's Wednesday, the midweek. So I'm sure you're looking forward to Friday when you will say, thank God it's Friday. Anyway, markets continue to discuss what to expect from the U.S. trade negotiations later this week. Meanwhile, China trade surplus slumped to $13.43 billion, missing expectations. Is the trade war biting Beijing already?
Definitely, the trade war has put a dent in business activity and in exports of China. And, a majority of economists here are convinced that if Donald Trump really proceeds with his plan to increase the import tariffs on Chinese goods, this will cost another 2 to 3% of China's export growth. Of course, the export data has triggered new speculations about what to expect from those trade negotiations between the Chinese and the United States, which are expected to continue at the end of the week. Of course, also, those speculations have been triggered by new reports, or have been fueled by new reports that came from Reuters. Reuters reports that last Friday, the Chinese government sent a diplomatic cable to Washington where large parts of what the Americans had demanded from the Chinese before, during, those negotiations in recent weeks, were missing or simply erased. So it really looks like the Chinese backtracked on many of the concessions they had made before to the US. Of course, these are only speculations and rumors, but a lot of stuff for the markets to discuss about and to be nervous about. And that's why the stock market really isn't getting into gear again this day here in Frankfurt. Look at the German share index. It's really sort of going sideways in a really zigzag way again.
Aside from that, of course, Trump's tweet wiped off about $1.3 billion this week. Is the market actually damaged enough, or we should expect more rout?
We definitely should expect more of a rout if those trade talks between the Chinese and the Americans were to fail. Let's not forget, many of the markets in the world are on relatively high levels. Even the German share index DAX, despite the losses it has seen so far this week, it's trading not very far away from a 7-month high. So there remains some potential for a drop. Also, we shouldn't forget this is the month of May, a month that traditionally is used by many investors to sell shares. The saying, sell in May, go away. On the other hand, compared to the returns that bonds promise, there is really not an alternative for company shares. If we, for example, take the German government bonds, all of the bonds which are being traded on the markets right now, and if we calculate the average yield of these bonds, we get a negative result. It's at the moment at minus 0.08%. So company bonds definitely promise a higher return, and that should give some support for sentiment on the equity trading floors. Also, I have to add, we are getting a couple of quite promising earnings reports. Siemens, for example, today reported about a 7% increase of its operating profits. Sales are up 4%, orders on a record high for Siemens. So that's not bad.
Talking about that German industrial giant Siemens, of course, that company plans to spin off its power department, which is basically the production of large turbines needed for gas and coal and nuclear-driven power plants, a move that's due to the fierce competition, for example, by General Electric and to large overcapacities in this market. Now, are investors buying the plan?
Yes, they are buying the plan. The share price today of Siemens is, speaking a clear language. It's nicely up. This spin-off is part of a strategic move by Siemens to become more of a digitalization company. To put it simply, Siemens wants to sell more of its brain power and less hardware. And that, of course, has to do with the fierce competition you mentioned. Remember, 5 years ago, Siemens wanted to buy the turbine business of Alstom, which is, the power business of Alstom. But at the time, General Electric bought the Alstom business. Following this, General Electric had a lot of problems, not only in this business, but also with this business. It's, offering very, very low prices. It's really getting into this competition, not paying attention very much to the margins, and simply Siemens decided that it doesn't want to compete that way anymore. So the spin-off makes sense. Let's also not forget, this spin-off does not mean that Siemens completely drops this business. It's merely that in the future, the company will be managed like a fleet of ships and not like one big tanker. This is how Siemens' CEO, Joe Kaeser, put it. And that really gives a hint that Siemens doesn't want to end up to be a company like General Electric. It wants to stay agile, and that it is really rewarded by the markets today.
And we wish them luck on that. Anyway, thank you very much, Conrad. We just have 2 more days to say thank God it's Friday. Enjoy the rest of the day.